Gold is about to plummet. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, we're issuing a gold market alert as prices are on the edge of making another big move lower. We're going to show you just how far we think gold prices can go and why this is going to set up an unprecedented buying opportunity. Plus, we're going to take a look at the U.S. equity market that seems to be unstoppable. We're going to show you exactly where we think you should start taking profits and getting out before it takes a big move lower. And is the bond market the big story for the second half of this year? We're going to make the case for that as well and take a look at all the machine positioning. Let's head over to Goldman, where we picked today's story up with a headline. The Goldman Tactical Flow of Funds says recession in name only. Now, what are they talking about here is because everyone believes there's a recession coming. The U.S. equity market says we don't see any sign of a recession at all. And yet the economic data, at least from the government, continues to chug higher, suggesting that perhaps there is a little bit more steam left in the equity market before, of course, we start to see the data turn. Let's take a look at what Goldman's making the case here. They have their number one question is, what is the setup next week? And that technical overhang, is it done? Well, here's what they had to say is we're entering the best seasonal period of the year for U.S. equities at a time when people have been looking to sell. The first 15 days of July have been the best two-week trading period of the year since 1928, if you can imagine. It's not till the middle of the month when we start to see them fade. Since 1928, July 3rd has the highest hit rate, and not to mention followed by July 1st and the other statistical significant trading days during the two first weeks in July. And the NASDAQ, boy, it's done well as well. On top of this, been positive for 15 straight Julys. And what happens in the first half of July that has historically been significant for equities, new quarter, new half of the year, Goldman says, this is when a wall of money comes into the equity market. My hunch is that we will see some big money outflows as well. But one thing they're noting is there are reemergence in retail traders. We know that retail investors buy the most at the top. Now, let's take a look at the machine positioning here from Goldman. And one thing I want you to understand is, notably, we've talked about these machines bought rather close to the bottom. And now I want you to see that as the market has gone up, the momentum is slowing and they're starting to take some profits here, which is something a lot of investors don't do. But we encourage all of you, when you've made a bunch of money, take some off the table. Over the next week, Goldman says flat tape. The global equities, $13 billion to sell, with about $3 billion in the S&P to buy. That's almost nothing. In an up tape, they're buying $12 billion of global equities, $1 billion in the S&P. Again, almost nothing. In a down tape, $44 billion to sell, $8 billion to sell in the S&P. Look at this. Over the next month, in a flat tape, the machines are selling. They're taking profit. Now, they're not taking a ton of it, but you'll notice $24 billion global equities are selling. They're still buying $4 billion of the S&P over a month. That's a $1 billion a week. That is nothing. In an up tape, they're big buyers, $69 billion to the upside, $159 million in the S&P. That's nothing. That's like pennies in a month. In a down tape, look at this, $214 billion to sell global equities, $67 billion on the S&P. That's what to watch, because the machines are now getting to the position where they think the market could go down. Let's take a look here at TD Securities. Notably, they're maxed out on the long side. We've been saying this is coming again, and now they're maxed out. Look at this, $42.75 to sell. That's well below current prices. So you can see the machines is Goldman and TD is saying, look, we're not making big moves to the downside. We're just starting to take some profits off if the market doesn't go up, and that is a big thing. What could you do as an investor? Raise your stop loss levels up. That's what you can do. So let's take a look at what we think here. Let's look at our own momentum screens. On the S&P 500, momentum is positive. RSI is at overbought. We're talking way up there. It's 68. On the MACD, your moving average convergence divergence got a negative cross, but not for much longer if the market keeps pushing higher. Our Momentum Timer Pro, which takes a bunch of these different technical signals, averages them out, smooths them together, says 25 consecutive daily buy signals. Look, we had on March 30th a buy to open at 404. We're sitting at 444 as of Friday's close. We think market's going higher, S&P up to 450. As it starts to get into that range and it's maybe a little above, that's where we think it's going to stop. That's why we're noting tighten up your stops, because look at our momentum screens. Maxed out on the 1 month window, maxed out on the 3 month window, and 6 month window, which is pretty high, hard to get up there, is at a mid level. This is our Momentum Timer Pro report. Our CTA report, which we've been telling you, nails these moves in the market on the S&P, max long on the short signal, max long on the longer signals here. This has been telling you the market has has been favorable. And I'll show you, if you look at our report, it was having you buy back into the S&P way down here. And if you missed that rally, it had buy down right here on this move coming out of this bottom here. If you didn't like that one, it said buy here as well. It's been taking this whole trend of the S&P higher. Where do we think this goes? Well, look at this. You've got a left shoulder, a head, a right shoulder. This is called an inverted head and shoulders pattern. Here's your neckline. We've been talking about that for a while, that all it had to do is break that. Well, it broke it, came back, reconfirmed it, broke it again, reconfirmed it. Now off to the races. If you like to measure things, simply you just take this neckline here and flip it up to the top, and now you're talking somewhere into the 460-ish range, maybe up into the 470s, but there's your upside target. We're targeting 450 for our next move to the upside. We can see momentum's extended, but the MACD looks like it's going to turn and head higher. But look, let's put it this way. If you had our Momentum Timer Pro report, you were in this a long time ago. There's a link in the description below for both reports. Momentum, our CTA-Timer Pro, $30 a month, one of the best deals. Everyone that's on it is raving about how great it is, because we've shown you on the show just how well it nailed the NASDAQ move on QQQ. RSI 66, not totally overbought, but it's pretty close to that. MACD negative cross, but turning higher. Our Momentum Timer Pro report, again, looks at all these different momentum signals, smooths them out for you. 39 consecutive daily buy signals. It told you what to do. It's maxed out on the 1 month, maxed out on the 3 month, maxed out on the 6 month. What is that telling you? A reversal is coming. Hence, we keep telling people, tighten up your stops. We had a buy it open on March 30th, 315. Friday close, 369. Upside target, we're saying 380. This thing has to go. Now, many of you are looking here and say, wait a minute, your fast algorithm on your CTA report is backed off a little bit. Well, remember, what did we just see from Goldman? They're saying, look, the machines are starting to back off. Our report's telling you the same thing. How do you interpret this? You can either start taking some profits or just raise your stop loss levels up. That's the easiest thing you can do. All right, let's take a look at the charts here and see what we've got for QQQ. Remember, we told you it was buying down here, and then it bought here. And if you would have followed it and just bought into these positions, you would be rallying up here. We say this thing is going to likely go to 380. If you can think that, it's going a little bit higher here, possibly an even bigger push into the 390s level before it's all said and done. But we think this is almost tapped out. You'll notice the RSI momentum starting to slow a little bit here. Could the MACD curl up and get into positive territory? It's possible. We would need one more big push here in the NASDAQ to get there. And if retail investors do their thing, well, that could absolutely happen. But is the story for the second half of the year going to be more about the bond market than the stock market? Well, everyone's fixated on stocks. Bonds are set up for a huge move here. And of course, this from last week, Goldman says they estimate global bonds for sale on a flat tape. That was true. But if they rally, there's so much upside skew here from the machines. It's off the charts. Here we can note from TD Securities under 3.7% on the 10-year. That's where they're going to be buyers. Over 4% on the 10-year to sell. That means they're pretty much unlikely to sell any further here, kind of just waiting to see where the market takes it. And we've been talking about the rectangle as a reversal for the last 6 months. We'll look at this. We've seen bond prices on the long side in a rectangle pattern. It's a major reversal after a move. So in this case, we saw a move lower in bond prices. This means we're likely to see a huge move to the upside. And what are we noticing in our reports? Momentum has been building on these. The RSI has been slowly kind of meandering around 50s and heading a little bit higher. The MACD's got a nice positive cross. Momentum Timer Pro's picked up 22 consecutive daily buy signals, now maxed out on the 1 month window. And not long ago, many of you said, hey, look, this thing is a sell max on the 1 month. Look, this goose is cooked. I said, not necessarily. Watch it, and it did flip. You notice 22 days ago, this thing's been chugging along. We're sitting on our March 20th buy. It open at 106.88. Friday's close at 102.94. Why are we holding on to that? Well, because the equity calls are up. We don't have to worry about it. Sometimes the position's down and you think it's got potential, you can hang tight on it. Upside target unchanged from last week, 106.58. Remember, we were at max sell on these on our CTA report not long ago. Look at this. Our fast algorithm, which looks at a short-term trading window, is now up. And remember, our report takes those machine positioning, runs them on a historical overlay, leading. And what we see from Goldman, if there's an upturn, this report signals it. Look at our long-term signal. It's bought up to 35% on the long side. Let's take a look at the charts here. And let's see, TLT, there's that beautiful rectangle pattern oscillating roughly between 100 and about 109 on the upside. And so what we're noticing here, you look at this volume profile over the last 2 years is at 102.81. Buyers all now below. Buyers are coming in and supporting all the time the price moves below. That is a good sign. Let's zoom in on the 1 year. We see their buyers are same spot. They're heavy buyers down here. They want this bond market to move. And look at these here on the 6-month window, supporting all this buying beneath here, suggesting once we get through these moving averages, the 200-day, the 50-day, and the 100-day, that once we got a little selling up here around 105, a little more selling up in the 106 range, you break that 109 level. And next thing you know, you're up here in the 118 pretty quick. After that, we're probably in a recession and interest rates are coming down at the same time. Look for that to happen. All right, let's see, because that is, again, the second half story. But we started the show talking about gold. We think gold is heading a lot lower. Let's take a look at TD Securities, saying they're selling below 1,900. Well, if you know where gold prices is, we're not far off of that. Buying only above 1,975. We've noticed there's been a triple top. We've been talking about how when you see these triple tops in the charts, it's a sign the attackers are coming up and they lose. So they get pushed back. Then they regroup and they come back again, but they have less force because they have less people that want to join the fight. They get rejected again. The third time, what did we see? They made an attack. It was a weaker one. There wasn't as much volume. There wasn't as much force. Rejected a third time. It's a major signal here. We're going to make the case that gold's going to come down even more than it is now and hit our target. But now we're going to show you where we think a big buying opportunity for the metal is at. Let's take a look at our reports here. What do we see? Momentum is indeed negative. RSI is at 41, so we're at not quite at oversold level. We're floating right around that. MACD's got a negative cross, no surprise. Our Momentum Timer Pro now has shifted 9 consecutive daily sell signals. We've got a sell max on the 1-month window. So it's telling you, if this isn't on your hot list looking for a reversal, this is helpful. The 3-month window also is nice. It's got a sell minimum looking to go lower. We're making the case that we're going to see GLD. We'll look at the metal. I'll show you the actual metal here. Downside target, we think, is a 200-day moving average at 172 is the next move. We hit 178.27 at close. Our target was 178.07. So we got there last week. We saw that. I don't think the upside market's in play. Our CTA-Timer Pro is flirting around here on the short term as prices bounce. But look at our longer term window. This is where more money gets traded, maxed out on the short side there. So let's take a look at the charts for GLD, and then we'll look at gold. Here we can see gold, GLD coming down. What's our target is 172. That's the 200-day moving average. You'll notice that's where the volume starts to pick up here. That's where we started to see buyers at, is right around that 200-day moving average. And we know that it's important when you see prices cross a moving average, particularly 200-day, and come down and confirm the 200-day. This is where buyers tend to step in. That's usually a bullish sign, so we could expect perhaps a bounce off the 200-day moving average. But notably, we can see momentum is slowing, looking like it wants to bounce here as well. Let's take a look at gold futures, and what do we see? Maybe a similar story where it gets down to the 200-day moving average. What I want to suggest to you, my friends, is the big move is down here around 1,800, 1,815. If prices get down here, I think they can. What you have the big risk is you have a left shoulder, a head. It just comes down here. What is it going to bounce in form? Perhaps a right shoulder. If you know, gold tends to do poorly in the first part of a recession. So you get a bounce here. We think this is a very tradable bounce. And then if that turns into a right shoulder, watch out. Gold prices are coming way down. This would be your 1,800, would be your neckline. You're talking about this going down to 1,600 an ounce. That would be a huge buying opportunity, as many of you actually know. All right, let's take a look at the miners. We know so there's been a double top. Sometimes double tops, at least most of the time, turn into a continuation of an uptrend. Well, maybe that's not the case anymore. As we take a look at GDX, momentum is negative. RSI not quite in oversold territory, but pretty darn close. MACD deeply down there, negative cross. Momentum Timer Pro following gold there. 9 consecutive daily sell signals, showing some nice signals over the 1-month and 3-month window, suggesting prices are actually headed down. Notably, max short on our long-term algorithm here for the CTA report Things already been warning you. It's already short on the slower algorithm side. Again, giving you all the signals you need to improve your trading. Plus, we got our weekend watch list. We put that up for our subscribers to help them know what to trade. But here again, you see this. Here's your left shoulder. Here's your head. What's going to happen? Price comes down, hits around 27 or perhaps in the high 26s. This is our target. Now, can it bounce around in here? Sure. But now you get down here to 27, 26. What do you want to do? You take a flyer on the next move up. If that forms a right shoulder, you cap that thing out somewhere up in the low $30 price range. Maybe it doesn't get much past this falling profile line. If that's the case, GDX signaling major move lower. Of course, that would be super bullish later on. It'd be a story for later on. But for right now, look at our target is down here around that high 26 range. Let's take a look at the dollar. Of course, everybody thinks the dollar is going to zero, and someday it will, but not today. RSI is at 53. It's been slowing down a bit here. MACD's got a negative cross. Timer Pro's picked up a few buy signals, but it's dominating more sells than buys. Upside target, we said this was a 200-day moving average. It hit it. We think it makes another potential run on it. Downside target, 27.63. Remember, if you were trading the dollar, we showed people when this thing was max long. Of course, it was max short, but everyone said it's going lower. We said, no, it's going to reverse. It did. It was max long on both of these, and now is looking to reverse one more time. Let's look at the dollar. Start with UUP here first. And what do we see? It's kind of coiled up here. It tagged the 200-day. I think maybe it makes another run, gets rejected down to 28, where we possibly see a bounce again as the 200-day is acting as a source of resistance. And notably, momentum is kind of slowing down. We see the MACD looking to curl back down and head even lower, kind of telling you that the dollar is almost out of steam. And notably, we've used our example. You've dropped a ball here. The ball bounces, didn't get a big bounce. It comes down, bounces a second time. Less momentum, comes down, bouncing again, but with less power here. If the dollar is going to rally, it needs to get going here. Otherwise, momentum for the dollar continues to roll over, and somewhere around this 101.50 or 42, it breaks that. That means dollars coming down to 98. Tells us more a story of not that gold goes higher. Why is gold looking to go lower as the dollar goes lower? And why commodity prices and then stocks perhaps turn around? Why would bonds rally? Well, it would tell us that we're headed into a major recession here. It's a function of lack of demand for dollars when there is a lack of global trade. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.